We have Mike and Julianne Heedles. For this particular set of problems, we're doing the 1040, a Schedule A, and a Schedule B. So if you need any of those, I have them available for you. Okay, so for this one, we need the 1040, the Schedule A, the Schedule B, and the tax table. So we have Mike and Julianne Heedles. Okay. Now we need to look at all of this information. We find out this. We have 2 children. Okay. So we don't know their kids' names, but we'll just put child 1 and 2. Okay. We're going to assume they're under 17. So for their exemptions, they have themselves, so that's 2. And their 2 kids, so that should be 4. So far that part's okay? All right. Now we need to figure out their wages, salary, tips, etc. Okay. We have wages here and here. Okay, and I'm just going to look. No other tips or anything have been listed. Okay, so just wages. So we want to find their total wages. Okay, so their total wages $128,973. So that goes right here. Okay. So far so good. Next thing we have taxable interest. So we find taxable interest. So we're looking here, we've got Social Security, Medicare, wages. We can ignore those, right? Because those don't have anything to do with any taxes that you're getting back. That's just on your W-2s, right? We don't need that information. We have bank interest. This is interest. And here's dividends. And we have educational expenses, other expenses. Now, shoot. This one doesn't actually need a Schedule A because there's only one bank and only one stock. And, sorry, not a Schedule A, Schedule B. Schedule B, if you recall, you only have to fill out Schedule B if you have more than one bank or more than one company you receive dividends from. So we don't actually have to fill out Schedule B on this one. So we will just come to our 1040. The interest was $18.97. Okay. We don't have tax exempt interest. Ordinary dividends, $8.76. Okay. So your taxable refunds, credits, or offsets for state and local income taxes. Right. This is income. They paid state taxes. That's not going to go here. This is what they're getting back. Refunds, right? Okay, they didn't receive alimony. We don't have anything about a business income or loss. As a matter of fact, looking on here, we don't have any other income, right? These are all now things that they've spent. So we're done with the income section. So since we know they don't have any of this, they don't have any other income, you just put zeros until we get to the total, and we're going to add those up. So Actually, I can just come down here. One 31746. Okay. Good so far? Okay. Now, the next section is looking for adjustments. Okay. We have educational expenses, medical expenses, taxes, interest, state tax, contributions, casualty and theft loss, and job expenses. So if we look at this, he doesn't have, there are no educator expenses, no performing artists, no health counts. We don't have no moving expenses, no self-employment stuff, no penalties, no alimony, no IRAs. We don't have student loan interest. He has educational expenses, but they don't have that here. Tuition and fees, though, $400. Now, we would have to attach this form, which you don't have right now, but it's got all the instructions and everything on how to fill it out. Basically, it's all the school information for where you paid that money to. And then domestic production activities, well, we don't have those either. So we're going to add lines 23 to 35, and we get $400, which we then subtract from this. So far, okay? So itemized deductions. Now we need Schedule A. Schedule A. Okay. Medical and dental expenses. We have a list of those. So we're going to total those up. Sorry, I tried to fit all this on here. So 600, 5240, 2300, 510. So 8650. Okay. The amount from line 38 right here. Come on. Is that better? Can you see it better that way? Or? Okay. We multiply line 2 by 7.5%. So I will pull up the calculator for this one because actually we're rounding. Okay, so 9851. Subtract line 3 from line 1. If line 3 is more than line 1, which it is, right, we have to enter 0 here. He did not have enough, or they did not have enough medical expenses to deduct. Okay. Next section, taxes you paid. We have state income tax, real estate tax. So total state income taxes were $4,311, and those were state income tax. Now, you can deduct sales tax. That would mean you have to keep every receipt of every single thing that you buy for the 365 days of the year, and then add up every single tax from every single receipt from every single thing that you bought. Most people don't bother, but you can if you want to. So you can do that. Real estate tax, they had 9,213. Okay, and if we look on here, there's no property tax listed, so we don't have that. Other taxes, there are no other taxes, so we're going to add these two together. Okay, so right here, we already know that this is going to be larger than the standard deduction, so we're going to go ahead and be sure to keep going. Okay. Interest you paid. We have interest on the home mortgage. Okay. And then I look through here, there's no points reported, no insurance premiums, no investment interest paid. So that's our total for this part. Next section, gift to charity. If you look, they had two kinds of contributions. They had, or sorry, three kinds: cash, used clothing, and old furniture. Okay. Cash. Okay, if you have any gift of $250 or more, you have to see instructions. I didn't print the instructions. Hold on one second. Let me pull them up. Now that I've read the instructions, all it says is that you had to keep a record of it, which I knew actually. So you don't send them the record. But remember how I told you with your taxes, you're supposed to keep everything on file for 7 years. So like I said, if you do the sales tax, you have to keep all of those receipts for 7 years because you have to keep everything on file. So if you have made a contribution of more than $250, you have to have the receipt because charities will give you a receipt for your contribution. You have to keep that with your tax file so that should anything happen and they ask to see it, you can prove it. Okay. So their cash deduction was $980. Okay, and then we have other than cash. Okay. We have used clothing and old furniture. So we're going to add those together. $700. Okay, now in this one, we have to attach a form if it's over $500. I don't have this form, but again, all the instructions are on it. This is one of those self-explanatory forms. Again, asking for the information of who did you give these items to. And usually they'll provide you with a receipt. Like if you donate furniture to the Salvation Army or something, you can ask for a gift receipt and or charity receipt and they'll give it to you. So you'll have to keep that as well. Carryover from prior year, if you donated stuff in, like, so this is 2012 form. If you had donated stuff in 2011 that you didn't claim, you can put it on here. We're going to add those together. Okay. Casualty or theft losses, you do have to attach a form. Again, I didn't give you this form, but you'd have to fill it out. We had storm damage and a camera stolen. We'll add those together. 4,050. That goes right here. And you'll see that there's no itemization in any of these, like inside each category. That's why there's these other forms also. So I can attach the form that will itemize the damage or the losses. And then also you'll have to have proof of some, like keep proof with your taxes. If it's a theft, maybe copy the police report. If it's storm damage or house fire, then you have your insurance report. You want to keep that with your taxes. All right, so if we look through this, we've done our medical expenses, our taxes, our interest paid, our contributions, our casualty and theft losses. We have left, we already did that, union dues and tax prep fees. Unreimbursed employee expenses are your union dues. If you have to pay money for a union, if you have to buy your own uniforms, if you have to travel, not to and from work, but as a condition of your job, like if you're a delivery person and you use your own car, these are the things that you can be deducted here. Tax prep fees. Okay, other expenses, just double checking. We didn't have anything. We're going to add those up. Okay, we're back to adding the total income. And we have to multiply it by 2%, so times 0.02. So 2627. Line 26 is greater than line 24. So you can't make these deductions because you're only allowed to deduct a certain percentage of your, it has to be above a certain percentage of your income. So this has to stay 0. Okay. There are various things that do and do not qualify. If you have questions about this, there's information on the tax, the IRS Gov website, or the instructions for the Schedule A. We don't have any of those. Yes.
Number 25 looks like it's wrong. Because that's not right.
131346. Yeah, that was their total. That's when you multiply it times 0.02. Yeah. So you take their total income and you multiply it by 0.02 to get this number. And then if this number is larger, you subtract them and that answer goes here. Since 26 is larger, it's just 0. It says like right here. Okay. Then we add all this all together. So do that by calculator again to make sure I don't make any mistakes. Okay, so 26364 is their total deductions. Okay, now you can, if you want to, this line right here tells you if you elect to itemize these deductions even though they're less than your standard deduction, check here. You can do that. If you want to itemize and deduct only 8,000, the government is totally happy with that. But you're then going to be paying more tax. So, your choice. We bring this figure to line 40, itemized deductions. Okay. So, 364. Okay. We're going to then subtract. Okay. Our next line is our exemptions. We had 4, right? 2 adults, 2 kids, so 4 exemptions. So we're going to do 3,800 times 4. And then subtract that from the 104,982. So that gives us 89782 for taxable income. We get our tax form, our table. 89782 is going to fall in here. They're married, filing jointly. So their tax is 14504. Okay. We're not going to do an alternative minimum tax. So we keep 14504. Okay. They have no foreign tax credit. We don't have any child care expenses listed, but if they paid for daycare, it would go here. Education credits we'd have that. Retirement savings contribution credit would go here. Child tax credit, if they received that, it would go here. They make too much money. Residential energy credits, this is, again, remember, if you upgraded your appliances, you're eligible to take a certain amount of credits. Other credits, okay, we have no credits. And to get the earned income credit, well, that's further down. Okay, other taxes, if you're self-employed, if you had unreported Social Security or Medicare, if you had tax that you owed here, if you received taxes or payment for employment in a household that they didn't pay your taxes on, like if you clean houses for people, or if you're a nanny or something, or landscaper or whatever. If you are a first-time home buyer, you get a credit. So if this one is, you have to repay it if for some reason, I don't remember why. Other taxes, you don't have to worry about that. We're going to add everything together. I would say that for most people, these questions here don't really qualify for the majority of the population. Very few people have to worry about those. Okay, federal tax withheld. Oops, 15125. Put that in the wrong place. Okay. Estimated tax payments from a 2011 return. If you paid extra tax because you chose to, you put it here. Earned income credit. You have to make less than a certain amount, and for married filing jointly, it's around, I want to say it's 46,000-ish, or 40,000. But you have to make less than that, and they made, 89. So I know that they're less than, they're around 40 somewhere. So I don't even have to worry about it. Additional child tax credit, we won't worry about that. We haven't done any of this stuff, so 15125 is how much they paid. They paid more than they owe. So they'll get a refund. So we're going to subtract these two numbers. And they get a whopping $621 back. And again, if they want this direct deposited, that routing number goes here, account number goes here. You have to be sure to click this. Okay, here's this is fun. Amount of line 73 you want refunded to you. All of it, right? They'll hold on to it for you and apply it to the next year, or you can get it back. Or you can apply it to your 2013 taxes and carry it over to the next year. That's what that was from. Okay, if 72 had been smaller than 61, then we'd owe money, and that's what would go here. And then you sign all this, and if somebody prepared your taxes for you, they have to fill out this part.
Do we have to fill out 720?
I say if you're filing paper taxes, fill it out, because if you leave it blank, they might just go, oh, they want us to keep it. So I would fill it out. If you get this far in for like our test, that's fine. But if you were actually going to file this paper with the IRS, fill it out. Because I'm not really sure how they handle a blank there, but in my head, they would think, oh, well, you didn't put how much you wanted to refund, so we'll just keep it. Right?
Mm-hmm.
So